So, sustainable real assets. Let's kick off with a definition around that, or your definition around what your firm does. How do you define it?
If you walk through some of the things that we've done, we've spent a lot of time in, as example, building and owning charging systems, and a lot of time in owning and operating electric fleets.
Welcome back to the Raw Selection Private Equity Podcast. Joining us today is Reuben Munger, Managing Partner of Vision Ridge Partners, private equity firm investing in sustainable real assets. Exciting conversation today. We're going to electrification of vehicles. We're going to why, as a private equity firm, you should be narrowing your niche and broadening your appeal. So without further ado, let's jump into the podcast. And thank you very much for joining us today, Reuben. Reuben, if you could give us a 60 to 90 second breakdown of you, please.
Alex, it's great to be here. I'm Reuben Munger. I'm the founder and managing partner of Vision Ridge Partners. I grew up in the hedge fund industry. I spent over a decade at a firm called the Baupost Group. And so as a value investor, I came to this question of private equity and sustainability with the thought of how can you preserve capital and be part of a catalytic change. And so we've built a firm that manages over $3 billion across 4 offices and 40 people, looking at the changes in agriculture, transportation, and energy.
Perfect. So let's kick off with why did you go from hedge fund to private equity? There's a link there, but some would argue tenuous. It's pretty similarities, but obviously significant differences. What made you swap to from the dark side to the light, if we call it?
Absolutely. I mean, I think one of the things that's fascinating as an investor is how competition has changed and how much more efficient markets have gotten. So, I joke, but I started last century, as it were, and the opportunity for competitive advantage as an investor was very, very different. And so, even in the public markets, we were able to find areas that were very infrequently looked at, where often it might be, say, investing in a foreign country from North America and calling and getting annual reports mailed to you, translating them to English, and suddenly you're one of a very small group of investors looking at a given situation. Well, I think everyone's aware of the amount of competitive intensity that has gone up, and the efficiencies in public markets have increased dramatically. And so, as you build edge, I think for us there was a real value in focusing on a sector where you could gain real levels of knowledge, real levels of insight, and then secondarily, we really see value in the hands-on work that being part of a private equity firm allows you to do. So when you're building a business or you're starting a platform with what might be a really interesting project or two, but a management team of 3 or 4 people, your own experience and your own time can create returns. And so sort of the combination of the value of active ownership and then looking for the opportunity that you could find markets that were more inefficient, and combining those two for greater return and greater impact.
Okay, so sustainable real assets. Let's kick off with a definition around that, or your definition around what your firm does. How do you define it?
So we see all infrastructure and real assets effectively over time need to become more sustainable. Right, a planet with 8 billion people requires a lower resource intensity, so greater efficiency, reuse, and also methodologies that will create better economies and better returns. And so to us, as we look into the sectors that we work on, the key is what is lower asset intensity, what is lower resource intensity. And so it may be in agriculture using less water, or in the energy system using less or no fossil fuels, and therefore transitioning the energy system to one that is both better for the climate and better for the planet. And so that combination we see creates a lot of change, and that change creates a lot of opportunity. And so for us, sustainable real assets, as it were, is a category of infrastructure, physical assets, and resources that are almost definitionally more sustainable, less resource intensive, and with the opportunity to transition whole categories of industry and the planet.
You mentioned the word transition there. Are you targeting investments that already have that sustainable edge, or are you targeting investments and then implementing sustainability into it?
We'll end up doing a mixture of both. It really depends on the state of the industry. So we see what we would call a gray to green transition, where, as an example, we took private the largest ferry business in Norway, and most of our ferries were obviously using traditional bunker fuel. But the industry was in transition to electrification, and therefore it's the largest electric vessel fleet in the world at this point. And you still need a traditional ferry perhaps as a backup ferry, right? Because if and this is the case in the old school as well, but if your operating ferry breaks, that's the way someone gets from an island to work, and so you need to be able to deploy a new asset. And so that broader portfolio has much lower emissions, but still required that effectively gray history. In some areas, though, where the incumbent asset base isn't necessarily relevant, we'll start from scratch. And so if you take either our electric school bus business or let's say a utility scale battery business that we built and sold, in both cases, there was kind of an initial project of scale and a team, but we started the business more or less at that stage where there wasn't as much value to incumbency, and therefore you gained as much or more coming at it from the outside or with a newer company and initiative.
So and I guess on your thesis, you're looking into an organization, you're thinking already, how do you implement sustainability? How do you support them? Are you very clear before you get into the business where you can see the big moves, or is it kind of more when you get into it, you begin to see where those transitions and improvements can be made?
We really look at opportunities as it's a critical filter. So often it's either us walking through our own deep experience in a sector is finding the next thing where we see the math and opportunity is likely to work, and therefore are going to look for an opportunity with that thesis. Or as something comes in inbound, does it fit an existing thesis, or is the fundamental levers to be pulled sustainability oriented? Right, we aren't going to just buy something because it's cheap or we think there's a return. That's required, right? But we need to have that positive impact opportunity, right? If the ferry business weren't going electric, it wasn't going to be for us. But we saw the electric change as something that was causing disruption and actually was going to enhance returns as a buyer. So we saw it as a sort of pro-climate and pro-return.
Do you see a difference between mentalities of, said portfolio companies, but leaderships and teams, and the adapting sustainability and sustainability strategies? Because obviously you're investing both in Europe and in the US. Do you see differences between North America and Europe with regards to looking at how things are looked at sustainability and the mindset and mentality of it?
I think there's the sort of European culture is a little bit more attuned to the transition. It's more forefront of mind still for the largest asset allocators, whether they be pensions or insurance funds, and therefore sort of culturally it's a bit more front of mind. Here in the US, there's a continuum, and the continuum is probably just broader, where there are some places where it's purely a returns-driven conversation, and others where sustainability impact is important. I do think the other piece is there are a subcategory of leaders and management teams, as an example, where you're bringing great people with really strong successes outside of sustainable industries, and they're really excited about maybe a next chapter being in the work that we're doing. So you're able to attract really high quality people into the industry or into management teams as you build out platforms and businesses, and that's been I think accretive to the sector.
Sorry to interrupt. Just a quick mention of our long-standing partnership with Grata. As you will probably know, the private equity scene is constantly evolving, and deal flow is moving now to proprietary and data-driven processes. Grata provides you with the data and information of over 7 million private companies. So if you're looking to improve your proprietary deal flow and improve the data access, then reach out to Grata today. Now back to the podcast. And is there any, I suppose every day in private equity can be a surprise, but what surprises have you come up against with your, have you come up to with your portfolio companies that you've been like, oh, we didn't even think that would tick that box, or we didn't think that that would actually, the opportunity could be there, whether that be future technology, current technology. I mean, you just said that ferries are going electric, which has surprised me already. But is there any particular areas that you've been like, do you know what, this is actually pretty cool?
I mean, I think we do a fair amount of work trying to anticipate what changes are coming, but inevitably, as you said, not every path to success is a straight line up and to the right, and so often a regulation or a market opportunity that you thought was going to be large may cause a pivot, and it's where having the right experienced team can succeed in taking advantage of the market as it comes. And I think there's real opportunity there in putting the right platforms together, having assets to fall back on that are generating cash flow, and then looking and reacting to changes that are happening. As you mentioned, right, the sustainability sector has been on a massive cost decline, as an example, over the last 10 years. But we did have an interruption around COVID where the supply chains, caused real changes to cost. And so that applies to, say, solar panels or lithium-ion batteries. Those things are now back on kind of the old curve where 2023, 2024 estimates may tie into what people thought they would be in 2018, 2019. But 2021 and 2022 were periods where things were really expensive. And so what do you do and how do you adapt to those changes? And in some ways you had to just buckle down in that period. And now you're seeing opportunities expand where things you thought would cost a certain amount now are costing less. And so you're back on kind of a nice flywheel of positive outcomes.
Something that we've seen more and more with private equity firms is a transition to away from huge generalist and we do everything under one platform. You've got quite a niche firm with a niche focus and a very clear, if you go on your website, sustainable real assets, straight up there, no messing around, not one-stop shop. What benefits do you perceive from having that level of niche, the old saying of narrow your niche, the broader your appeal? How has that benefited the firm?
I think this is a great point, right? And my prior experience was a global firm that could invest in anything, anywhere. It had to be cheap, but we could do anything, right? And the value of that was being able to really find mispricings with a really broad lens. And so as a generalist, I think maximum value accrued to that broad perspective where you could come into a sector and say, wait, this is really interesting. And the long short manager, as an example, would say, yeah, but they might be missing earnings this quarter. And you're like, it's just massively mispriced. Earnings this quarter doesn't really matter. And that difference was a return opportunity. Well, fast forward to here where if you walk through some of the things that we've done, we've spent a lot of time in, as an example, building and owning charging systems, and a lot of time in owning and operating electric fleets. And therefore, our understanding of the costs, benefits, risks, and challenges as a firm are quite competitive. And so it means that as we approach a new opportunity or a new team, we feel like we can add value to them. They can teach us something, but we have a perspective and a depth of knowledge that really does help you come to a situation and move faster or move the ball farther. And a lot of this change and a lot of this work is about finding situations that you think there's going to be real growth and real opportunity where you can deploy a lot of capital and a lot of assets. But the bigger the pie is, the bigger the outcome is for us and for our management teams. And so I'm not negotiating with you about our relative splits are far less important than how big we can make this opportunity. And so I think that specialization means that you show up to conversations with a level of knowledge and perspective that can be exciting and can change a process or change a conversation to one where we don't want to be in an auction any more than anyone else does. And so the key is how to make the person we're wanting to do business with excited to work with us and get out of a more conventional approach to highest priced wins.
And have you seen, has that helped you with, proprietary deal flows, the key word around that, but have you felt that it's benefited you with a really clear, because it's one of those things where we kind of say, be very clear who you are and what you want, and then you'll move away from what you don't want. And what will arrive is is what you hopefully want. I'm sure you're still in processes, you still have to deal with bankers, you still have to deal with X, Y, and Z, but do you genuinely feel that that's benefited your processes as a firm with regards to deal flow?
Yeah, it does. It does two things. One, it sets up a really clear filter early on where up and down the firm, even someone who's relatively new and been with us 6 months and is in the middle or early stage of their career, they can pretty quickly figure out, is this something that's going to fit for Vision Ridge? And so our own ability to define and understand what fits our model means we aren't going to waste a ton of time on things that aren't going to be a good fit. And then it also works really well to go out and sell and talk about that vision and opportunity with counterparties where we see a real opportunity for change and the positive economic returns that come with that. And then also we focus a lot on how we're going to prevent the loss and impairment of capital and living in infrastructure and real assets. That's really important as well. And so to us, how do you not lose money in most situations, and how do you find a differentiated view? That does lead to a conversation that very, very few of our investments have come from traditional auctions. And so we find that as a key part of thesis-driven investing and the value of that deep specialization.
And the electrification of transportation, we mentioned earlier that you'd obviously gone down the ferry route, electrification of that's mental, they're enormous. I'm sure that takes some significant power. Everyone's kind of aware of the Tesla coming into market and all the majors and new vehicle firms coming in. There's a big push, certainly in Europe, that we see, which is anti-electric car. We have had, it won't surprise anybody, it's been raining in the UK, and we've had floods here, and there's a car park that's gone round that's got Tesla in there, and it's just gone around everywhere on the media that electric cars are dead because one car park is flooded, which you'd also wouldn't be able to get any petrol cars in that car park either. But that's not the point. So what's your vision around that? What are you seeing around the electrification of that? I think my perspective is it's coming, and embrace it. I have an electric car myself, but what are you seeing from looking at real assets and looking at the bigger side of transportation rather than what I regard as commercial vehicles, which is, I assume, the smaller end, but obviously more profitable end, or larger from a normal person perspective? What are you seeing from an industry perspective that's going to change things on a mass scale transportation, such as your ferries going electrified?
Yeah, this is a favorite issue of mine, right? And there are a stack of different reactions, right? First and foremost, almost like you suggested, if the power's out, you can't charge an electric vehicle, but you also can't run a gas pump. So, you can't fuel a traditional car when there's no power either. So people often overlook that minor issue. I think more broadly, there's not a product quality topic where, as prices keep coming down, driving an electric car is just a better experience and a better product. Like we have, we're an electric family. We have 2 electric cars, and it took a little while. My wife realized, wow, I never have to go to the gas station. This is fantastic. And so there's a little bit more inconvenience the couple of times we have to go farther, and you have to think that through. But there is a real product shift, and the product quality is really high. For us, then, in terms of real capital and real deployment, we see a lot of opportunities still in that more commercial side of things, right? So we own a business, Highland Electric Fleets. We're the largest owner of electric school buses in North America. And so there's an example where as you're providing an attractive cost opportunity to the school district. Once you buy the bus, they're lower to charge, lower cost to operate. They also have lower emissions. Right, and so the air quality around what a student is receiving on their way to school is better, and their air quality in the community is better. We're the largest vehicle-to-grid operator in multiple jurisdictions with multiple utilities, right? So there are times where that bus supports the grid, so it's an extra asset to the community. And then finally, this is one of my favorite stories, right, is the kids are coming to school less excited and less riled up because the bus is quieter, and so they spend their car ride not yelling as loudly. And so when they get off the bus, they're more ready to learn, right? And so sort of like, what other sectors do you have something that wins 4 or 5 different ways? And that school child is a more visceral idea, but someone who spends all day driving a truck also doesn't have the vibration of the big diesel engine and all those other things. And so you can see real quality of living and quality of life changes in addition to the economics and the emissions. So costs, as I mentioned, are back down. Right, lithium is down a ton, and therefore batteries are down a lot. And so that cost-driven architecture, I think, is going to be an attractive place for many of the commercial and industrial sectors, and then also changing costs on the consumer side. And then that's just a product conversation where I'm excited to get my next electric car, but we've been through a bunch and they just keep getting better.
Yeah, no, they're definitely improving and continues to improve, and we're seeing obviously more and more choice. When I bought mine, and there was a wide choice, but there was only certain ones that I was certainly interested in. It was Tesla versus the Ford Mach-E, and but now obviously there's tons of options. But it's really interesting to hear that the school bus element. Obviously, the US is vastly larger than the UK. I'm sure that the school network systems, I assume, fairly the same. I'm sure people are traveling hundreds of miles to get to just to one school. I'm sure there's small instances of it, but yeah, you make it think. I'm thinking about the bus journey. I mean, it's a long time since I was at school, but the bus journey from where I was, there's easily electric. My car could simply do it. Obviously, larger buses with obviously larger battery packs and everything that comes with it. So it could definitely be a simple change. And you think about things like vibration and other elements. It's clearly a big move from that. Not only am I the host of the Private Equity Podcast, but I'm also the founder and managing partner of Raw Selection. Raw Selection is a private equity specialist executive search firm with two divisions, one that focuses on portfolio, C-suite executive hires, and one that focuses on private equity direct hires of your back office and investment deal professionals to the industry. Alongside the podcast, we're passionate about giving back to the industry and giving people information that they can run and utilize. One thing we do regularly every year is we run salary reports on accurate and live data of people that we've interviewed and people that have shared their information with us. So if you're looking to compare your current compensation or your compensation for your next hire in your private equity firm or portfolio company, then please check out our YouTube channel and see the playlist of salary surveys. The ferry industry, do you see that going fully electrified as well? Obviously, there's going to be some big cross-Atlantic type channel type work, but from a UK to Europe type work, UK to France, UK to the Netherlands, I'm assuming that's easily done via battery at the moment.
Yeah, I mean, I think the Norwegian experience is a good one where they've done a lot of leadership, and there are a series of applications where either fully electric or electric hybrid make a lot of sense. That started with the car ferries that don't go that far and are pretty large. Now they're beginning to do it on the fast ferries, right, which are not car ferries but passenger vessels, and those are going a lot faster, so they need more power and more energy. So that advance in electric technology has allowed them to expand into a different category. Some routes, there's a big hydrogen route that it's the only, you can't really electrify longer trips, and particularly things over the blue ocean. But there is going to continue to be an expansion. You've seen other parts of the Nordics are making that electric transition, and so there's step changes of evolution there. Or there are places where a battery can change the emissions profile, let the engine run at a better profile, despite and use a battery to cushion the changing needs of the propeller. Right, so there's sort of a set of technologies to change emissions in the marine sector. There's also then obviously a lot of work being done around new fuels that are going to be lower emission for vessels that obviously are going across the Atlantic or the Pacific. That's a long way you can't go there on a charge.
No, I can imagine not. We look at the electrification of transportation. The thing that strikes me most is the kind of lorries and wagons and trucks, obviously moving things up and down, obviously the UK, US, wherever. Is there a big kind of battle at the forefront? Obviously Tesla's bringing it out. Who can build the best battery for lowest costs? Obviously, to go the furthest. Is that also happening in the commercial sector as well? Are the large transportation vehicles? Is there a big competition between who can get that? Is that as fierce as we're seeing in the normal automotive sector that normal people would see?
I think if you look at commercial vehicles over time, they've tended to be a little bit less fierce competition than passenger vehicles, and that's existed forever, right? Even if you just look at the the mid-sized van business in Europe or the UK, you have 3 suppliers instead of 10, right? Mm-hmm. So Fiat and Ford and maybe one other, but it's not quite as competitive. And so, as you move into electrification of heavy duty trucks and other things, you have a similar outcome. And you're seeing some collaboration on powertrain. So there's a consortium is building a big battery project, as an example, in the southeast of the US together to help get the right technology deployed. And so I don't remember offhand, but I think it's Cummins and Daimler and one other, right? So those are people that go head to head in many things. And here they're seeing the value of collaboration and scale. Because the industry needs it to work and needs to work in the most economic way. So joint ventures are a way to solve that.
It's interesting. We seem to be seeing a lot more joint ventures and people coming together and putting down the pitchforks and joining in partnership, both in private equity and around industries around the world. So what are your influences, Reuben? What do you watch? What do you read? What do you listen to that you would recommend that others check out, please?
Well, I clearly need to spend more time on your podcast, but if you live on the listen to, both Patrick O'Shaughnessy and Ted Seides do great podcasts around investing, and it's not just private equity; it's about how allocators think, it's how venture capitalists think, and it kind of transits the framework broadly in a way that's really accretive, I think, to understanding the industries. On reading, my favorite book of last year was something called How Big Things Get Done. It's by a Danish economist, Bent Fleeberg and Dan Gardner. They basically studied big projects and figured out what are the things that make you hit something on time, and on cost, and when you miss. And then if you're on it, when you miss, what's a big miss, right? And that's what we do. We want to think through where are risks and what are risks you can afford and what can't you. And it's a great example, though, where solar power is the least likely to miss on cost. And when it misses, it's not very bad, because you're basically just putting out a kit of Legos, right, where you're doing the same thing over and over again, as opposed to a really complicated industrial process. And so it's sort of a great point in how the energy transition is making many things simpler, and what that does to risk and therefore return. So that was the winner of last year, and this year I'm sort of more eager to read Not the End of the World by Hannah Ritchie, and she's a sort of data-driven scientist who visualizes the scope and scale of the transition. So when we talk about lithium and lithium constraints, and you look at how much we need to grow lithium in aggregate relative to, say, fossil fuel extraction, and fossil fuel extraction is some massive multiple of what we need to do in lithium. And so, sure, we need to grow it by a material multiple, but it's tiny in the scope of what we extract from the planet. And so, as we shift our foci, some of the problems that seem big become very small. So she does a great job of articulating that in this book.
I think appreciate the recommendations. 2 I haven't read myself, so I'll certainly be checking them out. If anybody wishes to reach out to you post this podcast, Reuben, how best do they get in touch, please?
Yeah, so our website is www.vision-ridge.com, and my email is rmunger@vision-ridge.com. So thanks for the time, and I appreciate getting to share things with you.
No, appreciate you coming on, giving an insight into the world of sustainable real assets, talking all about electrification, and also giving us that clear indication that private equity, for those listening, narrow your niche, certainly the broader your appeal. So thank you very much for coming on to the Private Equity Podcast.
Thank you.
And as always, thank you very much for everybody listening, for joining us. Should you ever need support with private equity professionals across Europe or North America, please do reach out to us at Raw Selection. If you've not already done so, please do subscribe to the podcast, and you'll be notified of the next one that comes out now every single week. But till the next time, keep smashing it, and thank you very much for listening.